Look, obviously, there's a direct effect that as interest rate expectations point to lower rates, net interest margins are going to decline. And also, we need to realize that whenever margins decline for banks, it is when the major risks show up. And I think we're going to see that coming out as well, that we're going to see increasing risks and increasing loan defaults and then subsequent decline in the capital position of banks. I think the expectations of that is what is combining before the earnings announcements today.
And overall, what do you think will be their main message today? We're going to hear from Citigroup, JP Morgan, Wells Fargo. What do you think will be the main message from U.S. lenders at this stage of the economic cycle?
Yeah, I think you pointed that out earlier. Obviously, declining margins, bigger concerns, increasing in deal making, and then increasing in the M&A and deal making revenues. But at the same time, I think we're going to see increasing risks, more provisions made in order to increase the capital position, and finally, I think more regulatory concern overall, because what the recent banking crisis, both in the US with Silicon Valley Bank and in Europe with Credit Suisse, have shown is that we are more exposed at the banking sector to new risks and different risks. And I think the regulators have to take stance. And I think also bank executives and leaders have to actually be more concerned about those risks coming up.
And Arturo, it hasn't been that long really since we were digesting the collapse of Silicon Valley Bank. Obviously, here in Europe, we also had the deal of UBS and Credit Suisse, obviously under different circumstances. But nonetheless, what do you think the banking industry has learned overall in the wake of those two events?
It was ironic to see this year that in the World Economic Forum risk report that was released in January in Davos in Switzerland, the top risk identified by world executives was misinformation and disinformation. And if you think back of what happened last year, both in the case of Silicon Valley Bank, but also and primarily in the case of Credit Suisse, it was the spread of information, sometimes misleading rumors, what led these banks to default. And I think this is going to be also a major concern, because to what extent banks manage the information out there beyond the traditional stakeholders like clients and shareholders is going to be paramount. Because what we have learned is that there is no way to prevent a banking crisis when there is information out there that creates a panic. And this, I think, is something that regulators, again, need to take a stance on.